Democrats have been up over Trump in terms of the polling. And in the last few days, you've seen that flip around. More on Polymarket than it has on Real Clear Politics or Predicted. Nonetheless, Predicted, Kamala was up by a lot for the last, let's say, 4 weeks. And now it's neck and neck, both at 52. These are the betting markets.
So obviously. I didn't even need to ask David that.
No, he knows. He's got the function. Look, I think that this hurricane will be many things, one of which is a test of the leadership of this administration by virtue of that, how Vice President Harris does as well. She's cognizant of that. She's been party to all of these calls and briefings and is delivering messages to people in Florida and North Carolina as well. Look, it's on a razor's edge, pick your metaphor. The polling is very close and continues to kind of vacillate back and forth, especially in these swing states. Florida is not one of them this time around. But I think that everyone is watching to see how government officials, the presidential level, at all levels, are going to handle this. And I think it's just another moment when that could sort of change the trajectory of the race again.
Yeah, wow. I like how much we've been talking about within the margin of error. I don't have a preferred metaphor, but I do like how much, we've been really talking about the methodology of polling.
I mean, I think that we'll continue to do that, and there'll be a huge post-mortem about that as well, as there was last time and the time before that. So we have, this time around, very granular polling looking at likely voters in these swing states, and it's the rare outcome that's not within that margin of error. So I think, even on the last, New York Times Siena College poll, I think Nevada was the only one that was kind of outside that, where she had like a 7-point lead. But as you say, Matt, it keeps changing, and I also feel like this is a different cycle, and there's so much polling. Not a day goes by, it seems like, when you don't get a new updated poll. So.
Well, I've never had WSL space election before available on. And by the way,
who made this, Michael?
Yeah, Michael McDonough. Yeah. If you do WSL space elec map, it breaks it down by state. It's very cool. The technology that we have is insane on the Bloomberg. Elon Musk is going to campaign for Donald Trump in Pennsylvania over the next month, I've heard. So how much weight does he bring to the Trump campaign? I mean, how much does it really help, you think, having this, what is he, South African?
Yeah.
Having this South African, the richest man in the whole entire world.
If he had been born in the U.S., he would absolutely be running for president.
You think?
Yes.
Yeah.
Likely. I think it matters because he does have a lot of fans, particularly who are also in that Venn diagram. I think there are a lot of Trump supporters who are Elon Musk fans, and we've seen Donald Trump, saying that he's going to seek his counsel if he's elected again when it comes to kind of refining the way the federal government works. I'm fascinated by the Trump campaign strategy in these final days. Look, he's doing a rally in Coachella, which I think is so wonderfully strange. In California, which is not seen as a contestable state.
MSG is coming to NYC.
Yeah, it's going to come to New York at the end of the month as well. So, look, these are kind of high-profile places to hold rallies and do events, but these are both in states that I think most people would say are not winnable for Donald Trump.
Well, in New York, the thing is, Kamala Harris has dodged the question about state and local tax deductions. And it's very important to a lot of people in New York. Stephanie Ruhle asked her directly if she would lift the SALT deduction cap, and she did not answer the question. Yeah. Whereas Trump, you can tell me, and
he did do away with it. And
I also know that he's the one who put the cap on. I get that as punishment for New York voting in favor of. Or not in favor of him in the 2016 election, but he's the only person who said he would remove it.
Has come out with that policy. I agree with you on that, and I think that, as we, again, look ahead to these final few weeks before the election, there are things like that where I think she will have to be clear on where she stands on particular policy points. That's one of them.
But will she? Because she's only done interviews with friendly media. She hasn't sat down for any tough questions.
I mean, she's expanding. She did do 60 Minutes, and he didn't.
That's true. That's true. They declined.
She's now doing way more interviews than he.
I mean, I think 60 Minutes, The View,
Call Her Daddy.
Stern.
These are all left-leaning media outlets. Come on.
I don't know about 60 Minutes. I don't know that I would say that.
You wouldn't say that about
ABC,
like
a storied broadcast network.
Right. Well, but it's pretty much.
He's not going to rest until she comes on his show. She should do Open Interest.
With me?
Yeah. Steve Sosnick can open for Kamala Harris. Yeah.
It is interesting that we all have podcasts, of course, and Kamala Harris has been doing a lot of podcasts, but none of ours.
Are you teasing a money stuff guest? Secret guest?
She should do Rogan. She should do Rogan. That would be fascinating.
Maybe she's listening.
Yeah, she's taking advice from me.
Yeah. Anyway, 26 days until that presidential election. Great to break it down with David Gura. He is the host of the Big Take podcast. I'm the host of the Money Stuff podcast. Matt is the host of the Hot Pursuit podcast. And this is Bloomberg Business Week on Bloomberg Radio.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got 39 minutes to go ahead of the closing bell. Stocks trading at or near session highs, right to the numbers, because the S&P right now trading at a record 57.85, up 34. That is a gain of 0.6%. Now the Dow Jones Industrial Average up 401 now, higher by 1%. Nasdaq up 88. That is a gain of just about 0.5%. 10-year at 4.06% with a 2-year 4.00%. Spot gold down $13 the ounce, 26.08, a decline of 0.5%. And West Texas Intermediate crude flat on the day right now, 73.56 a barrel. So the Dow, the S&P, Nasdaq, all pushing higher. Could see records today for both the Dow and also for the S&P 500 index. One area of concern for markets this election season has been President Trump's threat of sweeping tariff increases. Tiffany Wilding is an economist at PIMCO.
there's a quote transition cost to that. The economy will have to transition to some new place after you implement those, and it would likely cause elevated recession, elevated inflation, the potential for recession. It would be a really tricky spot for the Federal Reserve as a result.
PIMCO's Tiffany Wilding was interviewed this morning on surveillance on Bloomberg television. Sources tell Bloomberg's Stellantis CEO Carlos Tavares is planning a deep management reshuffle in response to the automaker's disastrous profit warning. Stellantis, parent company of Chrysler, Jeep, and Fiat, among many, many other brands. Stellantis shares today, they are advancing now by 1.7%. And Apple's Dan Riccio, who oversaw the company's push into mixed reality headsets and previously served as its hardware engineering chief, is retiring. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much for that update. Let's talk about nuclear. We're talking about a lot more these past couple of weeks. Of course, you think about Microsoft's announcement to partner with Constellation Energy, reopen 3 Mile Island. It, of course, has breathed a lot of life and excitement back into nuclear, back into uranium. Let's break it all down now with John Kotek. He is Senior Vice President of Policy Development and Public Affairs over at the Nuclear Energy Institute. John, it's great to have you with us. Matt and I have spoken to the CEOs of a couple of different uranium miners in the past week or so, and the question I keep asking them is, what does this moment feel like? Of course, it feels like there's been broad support for nuclear for a while now, but we were looking for a catalyst. Now we have one. How would you describe this moment?
Yeah, well, first, thanks for having me. I describe this moment as a long overdue recognition of the value of nuclear energy as part of a clean, reliable, and affordable energy system. What's happened in the last few years is, as companies focus more and more on reducing the carbon intensity of their energy production or their energy use, they come to recognize that having something like nuclear power that's available 24/7, that can run 18 to 24 months at a time while producing carbon-free power, is enormously valuable. In addition to things like the job creation, the tax base, the other economic benefits that come from nuclear power. We're seeing a moment where people are recognizing that it's really important to both keep the nuclear we have and get on a path to build more.
I wonder about the affordable part of that. I mean, nuclear is clearly, there's no carbon emissions, right? You only have to deal with the waste, and we can talk in a bit about ways to deal with that. The affordability part is what always dogs me when I talk to experts like our reporter, William Wade. Is it really, can we really get there? Because it seems like the costs, the initial layouts are so high.
Yeah, and so great point. There's a couple of things you need to recognize here. One, yes, the initial layout is high, and frankly, when we built the nuclear power plants that we have today, right, they cost more than the coal plants, for example, that were being built at the time. But they become an asset that's available for 60, 80, even 100 years. And once you've paid off that initial construction loan, what you've got is an asset that's producing very affordable zero carbon power. And so it really is something that is almost a gift to future generations. We're benefiting from the investments that were made in the plants that we have today back in the 70s and 80s. Future generations should benefit from the investments we make today. So that's one part. The second part is you've got to distinguish between the cost of a particular resource and the system cost. And what I mean by that is, look, we're going to build a lot more wind, we're going to build a lot more solar. But because of the intermittent nature of those technologies, to run a whole grid using just those technologies, you have to enormously overbuild both those technologies and the storage that's needed to carry you through periods where you don't have the wind or the sun that you need. You also need to build out enormous amounts of transmission, which is very difficult to get built. Nuclear helps you avoid having to do that. And so even though that particular increment of nuclear generation might look more expensive than a solar farm, for example, on a system basis, by having nuclear, you can avoid a massive overbuild of these other technologies and ultimately save consumers money. And what matters at the end of the day is what are consumers paying.
And of course, you're talking about expenses here. Something that Matt and I have been talking about over the past couple of weeks is just the timeline. Of course, the point has been made to me that spinning up and turning back on these nuclear reactors, it's not like switching a light switch necessarily. So even with all of this momentum, of course, you have Google too thinking about using nuclear to power their data centers as well.
And Amazon.
Exactly. I mean, you have to imagine all the big tech companies, reported or not, are looking at this. So, I mean, my question to you, John, is what kind of timeline does it take to actually spin up some of these?
Yeah, so as we look down the road to some of the new technologies that we're looking to bring online, those should be able to be constructed in a much shorter period of time than we've seen historical nuclear power plants built. If you look at the experience in Japan, for example, about 20 years ago, in South Korea more recently, they were building large reactors in about 5 years. Right? The experience here in the U.S. has been significantly longer than that, but that's because we haven't had a sustained program of new build. These are big machines, they're complicated, and so the more that you have experience building them, the better you get at it. We've even seen that with the 2 new reactors that came on in the state of Georgia recently, called Vogtle Units 3 and 4. As they went from Unit 3 to Unit 4, they saw a 20% reduction in cost and a 30% increase in efficiency in the construction, just from the learnings going from one unit to the next. If we can start building these things at scale, we're going to get very good at them, and we're going to shorten those timelines.
It's an interesting point about the expertise needed. And of course, nuclear, it's a really exciting time. I mean, you put AI, you attach that to anything, and suddenly it's very exciting. I'm curious what talent retention and recruiting has been like over the past couple decades since, again, nuclear, it's been waiting for a catalyst, but it's been waiting for a long time.
Yeah, and what we've seen is that we can attract we can attract people into nuclear jobs in large part because people recognize these as very long-term careers and very well-paying careers. So when I've asked leaders of organized labor, for example, about their concerns in finding the workers to serve as the electricians or the construction workers, what have you, in these facilities, they say, show me the jobs and I'll find you the people, because the people see these jobs as a pathway to the middle class. And they see a safe job, they see a long-lasting job, right? These reactors can run 60, 80, we think maybe up to 100 years, okay? So the type of facility that you can build a community around, the type of career where you can set down roots in a particular community. So we think as these projects move from the planning stage into construction and operation, that we'll be very competitive in bringing new workers into nuclear.
I want to talk about, I always talk about the Bill Gates documentary on Netflix. I'm sure you've seen it as well, Inside Bill Gates' Brain. He talks about small modular reactors and new technology that allows you to reuse the waste in terms of reuse spent fuel. And this has obviously been one of the big problems with nuclear. When you get the spent fuel, you've got to bury it under like the Cheyenne Mountain Range or something and leave it there for the rest of eternity. Is there a solution to that?
Yeah, so first to the Bill Gates thing, I'm really excited about that technology. I actually worked at the facility in Idaho where the predecessor to that technology was demonstrated. And so it's really exciting to see that going into commercialization. I should point out there are actually several other reactors, both here in the U.S. and in Canada, where construction has started on building next generation reactors. So that's all very exciting. In terms of the waste question, it's important to recognize that the waste generation from nuclear is very small. If you or I got our lifetime of energy, not just electricity, but total energy from nuclear, the waste from that could fit in a Coke bottle. Okay, so it's a small amount of material. We also know where it is, right? It's very well accounted for. I worked the facility I worked at in Idaho had several spent nuclear fuel storage sites within a couple hundred yards of my office. So we know how to manage this. It's straightforward. You put the material after a sufficient cooling period into concrete and steel overpack, and you can air cool these things. That part's not difficult. Ultimately, we are going to need to find a final resting place for this material. Fortunately, we know how to do that too. You want to put it into a stable geologic environment, maybe 1,500 feet underground. Our friends in Finland have developed their repository. They're in their testing phase now. Sweden has selected a site. Our friends in Canada are down to 2 sites to host such a facility. So other nations are moving forward. We know how to do it.
I would just shoot it off into space, John.
It's funny you mentioned that. People actually considered that back in the 50s and 60s, and then the space shuttle blew up, and that idea.
That would be bad.
Yeah. Okay, yeah, that would be bad. But so other countries are moving forward with this. We are at a political impasse here in the United States. I should note that funding to pay for this has been collected. The government put a 1/10 of a cent charge per kilowatt hour of electricity generated from nuclear, a tax on spent nuclear fuel. As a result, there's more than $45 billion sitting in the Treasury to pay for this when we can get Congress and the administration to grant a path forward.
And John, I mean, we've been talking about Microsoft, Alphabet. We've been talking about Amazon, and I made the point that, reported or not, probably all of these big tech companies are talking about partnering with nuclear providers in some way. I mean, are you seeing that in your role, at the Nuclear Energy Institute? Again, you're SVP of Policy Development and Public Affairs. I mean, what sense have you of the conversations that are going on in the industry right now?
Yeah, absolutely. As more and more companies focus on decarbonization, they're coming to nuclear. And so the big tech firms that you mentioned. Another thing is oil, gas, chemical, steel, pulp and paper, a wide variety of companies that need not just clean electricity, but also need clean heat. So nuclear power plants run at high temperatures. Next generation reactors, like the Bill Gates one we talked about before, will run at even higher output temperatures. As a result, that can serve as a source of process heat to help clean up some industrial processes that currently might rely on coal or on natural gas as their source of heat. So I think you're going to start seeing more than just the tech firms, but companies like Dow, which is partnered with a company called X Energy from Maryland to build a gas-cooled reactor in Texas to help provide carbon-free both heat and power to clean up that facility. So a lot of opportunity.
I got to cut you off, unfortunately. Katie and I could talk to you about this for hours. Truly fascinating. And I didn't even get to ask you if it's annoying when people say nuclear. But thank you so much for joining us. John Kotek from the NEI.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We got ourselves a major rally underway. 20 minutes to go ahead of the close. Dow Industrials, a record. S&P 500 index, a record. And on top of that, best level of the day right now on the S&P. Let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shai. That's right. U.S. stocks with a bid today, with the Dow currently up 438 points. S&Ps are higher by 40, while the NASDAQ climbs by 0.6%. The U.S. 10-year rises to 4.06%. Gold is down 13. Oil is a little change. And Bitcoin, that's lower by 2%. Among the main 11 S&P sectors, leaders were tech and the financials. Utilities and telecom were under pressure. And leaders to the upside in the Dow, Honeywell and IBM, while Boeing fell 3.5% and led to the downside. In the pharma space, GSK is going to settle the Zantac liability cases for up to $2.2 billion. And wrapping things up, Norwegian Cruise rose as much as 11%. Citigroup upgraded the shares to buy. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, this is Bloomberg Business Week. I'm Katie Greifeld alongside Matt Miller. Of course, we are filling in for Tim Stenovic, Carol Masser on their way to Los Angeles. And they're missing an interesting market. Of course, we are less than 20 minutes until the closing bells. Of course, we have green on the screen when it comes to the S&P 500, currently up about 0.7%. We'll see if it can hold it for the next 18 minutes or so. But let's zoom out and let's talk about these markets. We're going to do that with Max Wasserman. He is the co-founder and senior portfolio manager over at Miramar Capital. He joins us from Northbrook, Illinois. And Max, of course, we are counting down to those CPI figures coming out tomorrow morning at 8:30 a.m. Eastern. You think back to what we learned on Friday when it comes, of course, to the U.S. labor market. There was a little bit hotter than expected wage growth. That seemed to spook the bond market a little bit. And Max, it seems like that has raised the stakes a little bit for the CPI numbers that we're getting tomorrow. Where do you stand when it comes to whether or not, we can kind of look past them, focus on all the good noises coming out of the economy, or whether, this could be an issue for the market?
I think it's going to be a short-term issue if it comes in hot, because then you may not get another 50 basis points that everybody's anticipating. But the Fed is telling you it's easing rates. They're seeing, the long-term trend of the CPI coming down. So you may have some hiccups along the way, but they're not going to go 50 basis point cut, then turn around and hike it. So they just may do it 25 basis points. But I think they're going to cut it around another 180 basis points in the next 12 to 18 months, because if you have the Fed funds rate around 480 and they're anticipating the real trend on CPI is under 3, that gives them almost 200 basis points to bring it down.
What if we get a jump in inflation? Are you concerned at all about that? Because with the labor market doing well, if inflation starts to look concerning again, maybe they won't hike, but they could skip a meeting.
Yeah, I think they could. And I think that's a short-term look, and that would spook the market a little bit because it's running on such optimism right now in light of all the catalysts that are out there. But if you still look at the long-term trend is they're going to cut. So I think they're still going to do a quarter and then maybe slow it down, or they may just say, we'll skip it and see more information. There's a lot of other things. You have the hurricanes and what that's going to disrupt the economy. You have what's going on with the strikes. You have what's happening with Boeing. There's a lot of issues out there. So I'm not convinced that they're going to stop cutting just because you have a slightly higher CPI. And I do expect, by the way, that inflation is going to be much more stubborn. I think the Fed was too aggressive, in my opinion, to go 50. I would have preferred they go quarter points along the way and let the data come in. But given the fact they already made a commitment to 50, it'd be very hard for them to slow down too drastically.
Well, it's interesting to sort of think about the different factors there with the strikes. Of course, any one union probably isn't going to show up in the national numbers, but you add them all together and you could say that maybe that's going to keep the pressure under wage growth for a while. And then you think about the hurricane, and this is a conversation we've had with our own Mike McKee, that, of course, hurricanes are horrible events and they're natural disasters, but the cold economic fact is that you have, of course, the rebuilding effort that comes after, which leads to an uptick in economic activity. And I guess I'm wrapping this all together for a question that is basically, do you think that there's risk that the Fed sort of overheats the economy and we see a bit of a melt up in the stock market?
Yes, I do, because I think the euphoria based on the Fed cutting drastically, they're looking for maybe another 50 to a quarter by year end, may be much too optimistic given what's actually happening. I think the Fed is behind the curve so many ways. They were behind it when they were raising, they were behind it when they're cutting. But with all the data that's out there, there's no clear-cut picture that says that CPI and inflation is going to drop right down to 2%. You do have strong employment. You do have a lot of catalysts that drive the economic recovery that we're going to experience with the disasters that you're going to see in Florida. But I think the Fed has made such a commitment with that 50 basis points. I think it was such a strong statement that says they want to cut rates because they think the long-term trend of inflation's down. So I don't know that a small-term hiccup, inflation ticks up, is going to spook the Fed or to change their policy. I think they'll just slow it down. But they're leaning to cutting, and I think they're going to do it over the next 12 to 18. What they do in the next month or two, that I don't know. But 12 to 18, they're going to cut rates.
So that would, I guess, help smaller cap companies. In terms of the large caps, we know, the AI play has been energized for so long. Energy, because of AI and because of maybe what's happening in the Middle East, pushing prices higher, has also been a good bet. And of course, if you look at what's going on in the Middle East, I guess defense stocks also could be a good bet. But what about small caps? I mean, as the Fed cuts, are the companies on the Russell 2000 going to be doing better and better?
I think money's going to move around. And should they do better? Yes. I think lower interest rates would lead the market to go to small caps just because the large cap tech play has been done. And I think it's a little extended, to be candid. But I think the whole market will spread out. I think you're going to see it in the market spread out from just the strong, large cap tech, and you're going to see the mid caps. I think you're going to see the whole broader market take advantage of it as money will go to where it's treated best. And at these multiples of technology, I don't think it's going to be treated that great going forward for the next 6 to 8 months. But you could see it in other areas of the market with lower interest rates. But in order for that to happen, you need interest rates to really come down a lot more than they currently are. Because money markets right now are still giving you 4.5%. The move that I think you need for even a broader, stronger market is you need another 50 to 100 to come out, where money markets are basically under 3%. Then people will be taking money and looking for a more aggressive place to get cash flow, to get growth.
Max, it's a great point. Of course, it is hard to break up with cash when we're still talking about yields of 4.5% or so. Definitely a difficult sell there. But you talk about rates coming down, benefiting the market broadly. But I would like to get specific here because in your notes, you talk about specifically the housing market, consumer discretionary stocks over the next 12 months. I mean, name some names here. Who do you think specifically will benefit?
Well, sure. I mean, now it's, the fact that what's happening with the hurricane, everybody's looking at the Home Depots and the Lowe's. We have investments in Home Depot. But I'm looking at it, if rates are going to come down over the next 12 to 18, the market's going to forecast that, you're looking at home improvement stocks. If mortgage rates are coming down, people are going to be more apt to refinance and go somewhere else and buy new homes. Or they're going to do home improvements because rates are lower. So to me, the Home Depots of the world, the Lowe's, would tend to do much better, even though they're trading at 52-week highs now, given what's happening. And also any rebuilding would do that. I think the consumer would do better because if they're less strained on higher interest rates, if they have more freed up capital, I mean, you're going to see that like in a McDonald's, you're seeing, I mean, they're becoming very successful with that $5 to $10 Happy Meals that they're putting out. So I look for those type of companies. Another one we like is General Parts because people are keeping their cars longer and they're going to do repairs on them and they'll benefit for that because they own the Napa stores. But anyone that puts more pocket in the consumer will ease up the pain that they're experiencing. with inflation. So it's not just interest rates coming down, it's also costs coming down.
All right, Max, thanks so much for joining us. Max Wasserman there, co-founder and senior portfolio manager at Miramar Capital.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, we're going to talk a little bit more about Milton, the preparation for that. It's expected to hit Florida and specifically Tampa this evening. I want to bring in Rob Carolan right now, who covers the weather, a meteorologist who covers the weather for us here at Bloomberg News. He's on the phone from New Hampshire. Rob, what do we know about Milton? Last we heard, the storm was expected to get worse as it approaches the coast of Florida.
Well, in regards to its expansion of its wind circulation, Matt, that is correct. It's becoming a bigger hurricane, but it's also now starting to weaken a bit. Over the last several hours, the eye has disappeared on the satellite photos. That means that we're not seeing the type of intensification that we've been seeing the last day or two. The Air Force is in there right now flying a reconnaissance mission from the data I can see they're sending back. The central pressure has come up quite a bit. The winds are starting to come down. All of this was expected. Milton is starting to interact with the jet stream, which is moving along the northern Gulf Coast. It's also starting to ingest some dry air coming off the continent. So it's pulling dry air down from Louisiana and the northern Gulf, and that's getting kind of pulled into the circulation. So the good news is it is not going to be a Category 5 when it hits near the Tampa area tonight. It's probably going to be a Category 3, Category 4 storm, but it is still going to do a tremendous amount of damage with sustained winds at landfall, probably at or above 125 miles an hour, and a 10 to 15-foot storm surge, generally from the Tampa area southward, possibly all the way as far south as Fort Myers.
I mean, it's just wild. You think about a Category 4, you know, where we are in New York, obviously have no sort of way to conceptualize that. But we were speaking with one of our reporters a little while ago about how Tampa basically sits on this continental shelf, how it's pretty shallow when it comes to the actual water that's around Tampa. And at least my understanding, Rob, is that that dynamic makes this much more dangerous than if it were on the east coast of Florida.
Exactly. The problem with Tampa is the shape of the bay. So the worst case scenario is if the eye of the storm passes, say, over St. Petersburg, just north of Tampa, what that would do is it would cause the winds to blow directly into Tampa Bay and push the storm surge right up through Tampa Bay. Then you get an area where the water is now being concentrated and it ends up producing a higher storm surge. If the eye ends up striking just south of Tampa, say from Bradenton down towards Sarasota and the Port Charlotte area, the storm surge will not be as bad in Tampa Bay because the winds will be blowing offshore rather than onshore to actually blow the water out of the bay. Conversely, the storm surge would be worse in those areas directly hit by the eye. But looking at the data right now, the models have been shifting the track a little bit further south, and it looks like that landfall, say, from Bradenton down towards Sarasota, Port Charlotte, is much more likely than it looked just 24 hours ago. So the Tampa Bay area may miss out on the really, really bad storm surge in the city of Tampa, but unfortunately, they're going to have to deal with the really strong winds on the northeastern side of the circulation.
All right, so we're waiting and watching. We're hoping that everyone who can or should evacuate has done so or is doing so now. Is hurricane season coming to an end with this, Rob? I mean, as a meteorologist, no. When is the end of hurricane season? I thought hurricane season was over.
No, the end of hurricane season is November 30th. So it runs June 1st to November 30th. The Gulf of Mexico is very warm, and to be perfectly honest, a lot of the computer models are suggesting another storm system is going to develop somewhere in the northwestern Caribbean Sea next week and could be threatening anywhere from Yucatan to Cuba to the Florida Keys towards next weekend, the weekend after the upcoming holiday weekend.
All right, Rob, really appreciate your reporting. Of course, that is Bloomberg Radio meteorologist Rob Carolyn with the latest on Hurricane Milton. Meanwhile, we are just a couple of minutes away from the close of U.S. markets. You take a look. Oh my goodness, I've been on air too long.
At the gains, right? I mean,
Yeah.
I am in charge of picking losers today.
Yeah,
and,
good luck with that.
Well, for a minute I thought it was going to be difficult, but then I remembered we are so focused on two big companies, Google and Boeing.
Thank you.
That are both down.
I kind of wish I had decliners because I want to talk more about Boeing. You can have Google though.
I'm Constellation Energy is a big loser right now. NRG is a big loser right now, and I can't figure out why.
Well, closing bell coverage coming up right here. This is Bloomberg Radio. Oh, pack.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
About 2 minutes away from the end of the trading day, Alex Steele and Scarlett Fu here to help us take you to the closing bell. We got a global simulcast. Carol Master, Tim Stenovic are somewhere, plus Romaine Bostic is somewhere. Apparently, we did not get that memo that we're supposed to do something cool, but we are joined by Matt Miller and Katie Greifeld, bringing it together on Bloomberg Television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. 44, guys. 44 potential record closes, Katie.
Alex, I'm glad you say that because we were debating that earlier, how many record closes there's
It's
been.
probably 44, but
Alex said that.
Is it really the most crucial moment? Because Katie and I feel like the Open is a pretty crucial moment.
Well, you're biased.
In terms
okay, you can't come on this show and trash the time of this show, bro, okay? Or else we're coming on yours.
No, we would love that.
You're welcome. You're invited.
Be a little crowded at the desk, all five of us, but, you know, we can link arms and hug. Anyway, you take a look at the S&P 500. Looks like we're going to close at session highs. I mean, what a volatile week it's been already, and it's only Wednesday and we haven't even gotten to CPI yet.
Yeah, after all these overhangs over the market, these macro issues, it's hard to believe we're at record highs. It's not just for the S&P. Alex pointed out the Dow is also at a record high as well, and all this on fairly light volume. I know.
We can
I just have to throw it in there.
We can do it. It's okay. Pharaoh's not here. Go ahead.
I like to talk about the Dow Jones Industrial
Thank you,
Average.
Matt
Katie
Miller.
only cares about the Russell 2000,
I had to
which is
disabuse Matt
also
of
up
that.
by a little bit. But yeah, it is. the bigger stocks, the bigger tech stocks that are pushing us higher. And I want to point out, it's the 5th week. I mean, it's only Wednesday, right?
Right.
But it could be the 5th week in a row of gains for this market.
And you're giving up the lead. It's the mid caps again at one point hitting a record high today. Not closing there, but hitting it. All right, there are the closing bells for this Wednesday. We are still settling out, but you're looking at an S&P up by about 0.7%. You got the Nasdaq up by 0.6%, and the Dow, I'm saying it, is up by over 1% as we kind of close right around here, guys, at the highs of the session, Katie.
Yeah, there you have it. And pretty good breath, too. If you take a look under the hood, you had 377 stocks finish in the green on the S&P 500, 124 in the red, Scarlett.
All right, let's take a look at the sector performances as well, because a lot of green on that screen. And the best performing group, surprisingly, is not technology. It's healthcare, up by more than 1%. Pfizer leading the charge there. But tech is certainly second, coming in higher by 1% as well. And industrials gaining about 0.9%. Among your laggards, utilities losing 0.9%, and communication services, I think that's really Alphabet there, putting a drag on the market, off by 0.5%.
All right, well, let's get to some of the specific gainers right now. And I wanted to start with cruises. You have a lot of action there. Of course, Norwegian Cruise leading the way with a nearly 11% gain today. That's after Citi came out and said, buy this stock, upgrading the stock to buy from neutral, saying that growth into 2025 and beyond has, quote, real legs. You can see that's also helping out some of its peers as well. I threw Carnival up as well. Carnival finishing about 7% higher. And then, Scarlett, you mentioned Pfizer, so let's go there right now, because Pfizer, really interesting day. Of course, the reporting came out a few days ago that activist Starboard Value took a $1 billion stake in Pfizer. And then news breaking today, this is according to the Financial Times, citing people familiar with the matter, that Pfizer CEO Albert Bourla plans to meet with Starboard Value, of course, and the market's taking that as good news. Pfizer up about 3.5%, Matt.
All right, I've got some of the losers here. Two of the biggest stories of the day are losers, right? Google is one of them, after we learned that the Justice Department has actually told a federal judge it's considering recommending that Google be forced to sell off parts of its business. Of course, we've already been reporting this. It's obvious. It's one of the big options here, and we're not going to find out what actually happens until August of next year. But it doesn't stop investors from selling this stock today. They're doing that. Boeing also said that it's withdrawing its offer to striking union workers after negotiations collapsed. The strike has now been going on for a month. JP Morgan says it costs $1.5 billion a month if they continue the strike. And they've already burnt through, I think, $8.2 billion in the first half. They're burning cash at a surprising rate. This really hurts. S&P Global warned that they may cut the plane makers' credit ratings to junk. We also see Constellation, the nuclear energy operator, down. NRG, another energy company, is down. I can't figure out exactly why. I'm going to say bond yields rise. Alex Steele, and you can correct me if I'm wrong. Is that a problem for these utilities?
No, it's such a good point. I was wondering the exact same thing. So it was Vistra, Constellation, and NRG were the worst performing stocks within the S&P, and I also couldn't figure out why, because I think Guggenheim actually had a price target increase over Constellation.
That's true.
So maybe you're right. Maybe it's higher bond yields, and you're using that as a dividend proxy, but they've been trading as an AI proxy, right? So it's kind of tricky.
All right, so maybe someone can, just email me and tell me if you know why.
IBU.
Then, or wow, the kids are IBing. Okay, and then Byrna Technologies. I thought this was interesting. A company that makes self-defense sprays and armor designed to be inserted into backpacks. It tumbled the most since 2020 after it missed profit, even though it got Mike Huckabee as like a celebrity endorser. I guess he's wearing bulletproof backpacks and using pepper projectiles to stun would-be assailants.
I don't really know what to say about that, but okay. Let's go to bond yields. So if we take Constellation Energy as a bond yield move, that's what we saw. Bond yields continually moving higher here all across the curve. 2-year yield up 6 basis points. We had a 10-year auction today. It was meh. Same thing as the 3-year. Tomorrow we get the 30-year. We get $22 billion worth. We're also above that 100-day moving average, guys, for the 10-year yield. We have a bit of way to go if we get to the 200-day, but nevertheless, technically, you've seen a lot of momentum in that higher bond market.
Yeah, it's been really fascinating to watch this sell-off and now just hovering around 4% on the 10-year yield. It's going to be interesting to see which way is up, which way is down. But let's get to some other stories. There's some interesting ones. I'm going to take us to crypto. I don't know. I'm a little tired of crypto. But anyway,
No, but there's new developments, right?
There is a new development. Well, there's kind
New
of...
developments in crypto. Does it combine with ETF at all?
No, unfortunately it doesn't. But one of the biggest mysteries out there in the world that's still remaining is who Satoshi is. Of course, the creator of Bitcoin. And the new development is that we still don't know who that is because software developer Peter Todd said that he is not Satoshi. HBO had put out a documentary that suggested that he is. But Peter Todd, we've now heard from the man himself saying, I am not Satoshi. I did not invent Bitcoin.
All right, I'm just going to jump in here really quickly because we did get some earnings from Applied Digital. It's the digital infrastructure company. First quarter revenue topping analyst estimates, $60.7 million. Analysts were looking for just under $55 million. And first quarter adjusted loss was 15 cents a share. You can see the stock moving up in after hours trading by almost 10%.
All right, so taking a look at that. Okay, here's my question, though. Back to Katie's story.
Yeah.
Why do we care who invented Bitcoin?
Oh, I definitely care.
I definitely care, too.
But why? But like literally why? Are you going to invest less or more because of it? No, it's its own asset class now.
So the thing is, I don't care as an investor, just as a human, Alex.
It's a mystery.
Know.
We want to know because we're curious people. And he's so rich.
Yeah.
Satoshi has so many Bitcoin. But I don't think it's like selling drugs to a cop. You don't have to say if you're Satoshi, right? I mean,
no, I don't think you do. But it's interesting. Haven't the Bitcoin in his wallet not moved, and that's part of the reason why we don't know who he is.
Yeah, but each one is now worth $62,000 compared to zero when he invented it.
If you're still with us, you're a very wealthy man, and we would love to know who you are.
He holds around 1 million Bitcoin.
That's so many.
I mean, yeah,
it's a lot of a limited commodity or currency.
Sounds like $62 billion.
Yeah.
Is that?
You know what? He probably needs a lot of
it
money if he's going to go to Disneyland because Disneyland has hiked its prices, once again, ticket prices. This is Disneyland in California, not Disney World in Florida. But the most expensive tickets, which are, of course, weekends and holidays, are now going up 6% to $206 a day. The lowest price admission, which is mainly 15 days in January and February, is going to stay unchanged at $104. So the lowest price is $104.
And that's just to like walk in. And then if you want like the fast pass, if you want food, if it rains, you need a poncho, which apparently are $15, as I learned from Paul Sweeney when he went to Disney World on Sunday.
Wow.
Yeah. Like things like that. You have a wristband, you just tap it, and all of a sudden that credit card comes due. I mean, my gosh.
I'm having a hard time picturing Paul Sweeney at Disney.
By the way, Sweeney goes to Disney World for free. He goes.
No, he does not. He paid for those tickets.
Really?
Yes.
I thought he goes on like junkets with Bob Iger.
He did, but this one he was going for fun with somebody else.
Disney World probably worth it. Compared to Disneyland, I think not worth it.
Well, Disneyland has California Adventure, right? That's like the specialty thing that they have at their parks that Florida doesn't have. Florida has the Star Wars thing, right?
Yes, and it has Space Mountain, which is, the coolest thing.
California has Space Mountain, too.
Does it? I don't know. I've never been to California.
I think so.
I'm learning a lot here. I didn't know this.
We were talking to Geetha Ranganathan of Bloomberg Intelligence earlier, though. Speaking of Disneyland / Disney World, Disney World is losing $50 million a day. Every day it remains closed.
That's wild.
That's a lot of money. And the parks business for Disney makes up a huge % of their operating profit. It's like 2/3. It's incredible.
Alex, that's why they have to raise prices in California. By the way, the new price increases take effect immediately.
Immediately. Alex, really quickly, I think I heard you speaking to Geetha. Was she saying that streaming has hit a turnaround point, or did I mishear you?
I mean, that was like 6 hours ago. I don't
know.
I don't remember what Scarlett said 5 minutes ago.
I don't know. You're like putting Alex on the spot.
No, I just thought it was really interesting.
Hey, Katie, what did your 10B guest say about the VIX?
The 10B guest? That was not FICO. I forgot who that was.
See? Yeah. Point taken.
Oh, no, that was Admiral James Stavridis.
We do want to know why the VIX is in its 20s when we're at all-time highs on the stock market. Spreads are super tight. Like, is there a lot of volatility here?
I don't know, but I hear that we have to go. So I'm going to wrap this simulcast. I'm no Carol Masser, but that does it for...
That does it for this simulcast. But please join us on Bloomberg Open Interest every day on Bloomberg Television from 9 to 11.
Hold on. You had come back to our closing bell coverage every day at this time for the market close.
We will all be there for that.
Says. Yeah.
All right, thanks, guys.
Bye, guys.
All right, coming up.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Okay, back to just radio. The TV
Just
people are gone.
radio.
I thought I would miss Romaine, but I didn't.
That was a lot of fun.
It was pretty fun.
Yeah, what cool ladies over there.
Good stuff there, and a lot really going on in markets. A 44th record high for the S&P 500. I would have thought maybe there'd be a little bit more concern about the hurricane.
Yeah.
Because this gigantic, I don't think Category 4 has much to do with the speed. Like, the speed can accelerate, and it's already going like 155 miles an hour.
I know, it's wild. And that's after it slowed down a little bit. So, I mean, you just think about the destruction, the devastation that this could cause, both when it comes to human lives, but also, I mean...
Property.
I mean,
apparently the water that's going to flood into Tampa will be high enough to engulf a 2-story house.
It's again, I made this point earlier, but, you know, I grew up in New Jersey, I went to school in Pennsylvania, now I live in New York City. I can't fathom it.
Right. Well, we did have Sandy. We had Sandy. Remember that?
Yeah.
Closed the stock exchange for like 4 days.
That's true, actually. That is wild. When was that, 2011?
2012, I think.
2012. I was in college.
The other interesting thing about Florida, which we were talking about, and I'm going to bring in Matthew Palazzola from Bloomberg Intelligence to explain again, is that these big insurers that Matt covers for Bloomberg Intelligence, AIG, Chubb, State Farm, they don't really underwrite a lot of risk in Florida. And I would have thought, Matt, it's because, well, obviously there's so many hurricanes that hit Florida, but it's not that.
So it is not that. A lot of these big national players, so we don't cover State Farm. State Farm's a mutual. It's not a public company.
I was just thinking of my own car insurance company.
But so a lot of these companies, there was a lot of fraud in Florida, if you can believe it.
What?
So there were these situations where adjusters would come in, they would assign the benefits to contractors, and they would run up the insurance claims. So what a lot of these companies said is, look, we can underwrite weather risk. We can't underwrite fraud. We can't underwrite the state regulator not letting us raise our prices. So that's why a lot of the big national companies actually pulled out. So a lot of the business there is written by, one, the state fund, so it's actually backstopped by the taxpayers, and two, small regional companies. And you see those stocks are down like 20 and 15%.
Katie has coined a phrase
Really?
that I'm going to be using henceforth.
Yeah.
You said Florida is...
Oh, I didn't coin that. A sunny place for shady people.
I like it.
Indeed. So I heard that the plaintiff's bar in Bermuda, there's reinsurance companies, right? And they were talking about when they watched the Super Bowl, and they saw ads for Florida local attorneys on the Super Bowl. So they were making enough money to run Super Bowl ads to try to get more business down there. So
Excellent.
Shady people indeed.
So AIG, Chubb, what are the main ones that you cover? What are the big ones?
So the big ones we cover, AIG, Chubb. The ones that will have probably a lot of exposure to this are going to be Allstate and Progressive. So they're active in Florida. Still less on a percent of equity basis than those other names we talked about before, but they actually have some business in Florida as opposed to those big ones that left. AIG and Chubb, well, mostly Chubb now, do a lot of high net worth. So if you see, these Tampa homes costing millions of dollars, Chubb may insure some of those, but not enough to have losses that were commensurate to the market cap that it lost over the past couple days.
And something that we were speaking about hours ago on open interest was this big dispersion, this big range in like how bad losses could be. When you think about, the upper end of this range, how does this episode compare to past hurricanes?
So this morning we talked about maybe $100 billion insured loss.
What are you counting in that? Because you can count so much stuff,
right.
And you can easily get it out to 250, right?
Yeah, so like economic, if you want to include things that aren't covered by private insurers like storm surge, flood, some business interruption, That could be much higher. But the insured value of $100 billion, that really depends on the hurricane kind of threading that needle right into Tampa Bay, which may not happen at this point. There's been a wobble, not really. It is kind of a technical term in the forecast, and it's moved down a little bit or south. So it doesn't appear.
Wobble is a technical term?
It's used by people who know hurricanes, put it that way.
I was going to say, what's a non-technical term?
So there was a wobble in between this morning and now, right? And so it looks like more of a Sarasota direct hit, which still is terrible, but maybe not that worst case. But to your question, Hurricane Ian in 2022 was like $65 billion. So even below that 100, this could still be a major event and one of the most costly hurricanes ever.
Wow. In terms of your coverage, I guess since those big insurers, and these are the ones that you focus on for BI, don't underwrite that much risk down there, this isn't that bad for them. How have they done this year?
The stocks have done well. And actually what you saw was 2 days ago, the whole group sold off a lot. And we looked at that and we said, look, these stocks are down a lot. The market share in the state is really not as high as what it would appear to be if it was a $100 billion event, their losses. And then you've seen the stocks actually up the past 2 days. So the forecast kind of getting further south and not that worst case, and the stock's actually gaining a little bit. And year to date, they've done pretty well.
I want to talk about the future of the Florida insurance market because, to bring it back to the start of this conversation, you have those big national insurers not really having a presence in Florida. You have a bunch of, regional insurers who are sort of filling the void there.
And state-backed.
I mean, I don't know, what's your take on where this market goes? Because you do have fraud, but also it does feel totally anecdotally, unscientifically that hurricanes are becoming worse and they're becoming more frequent.
So there's been a lot of work done in the insurance industry about what's increasing insured losses. And the industry was like, yes, hurricanes are becoming more frequent and severe, but the losses are being driven up by increased property values and increased population density. So that's happening there. So that's driving up losses. Florida has actually put in some regulation overhauls that seem to be working, and they haven't really been tested. They will be tested with this. So the market actually did seem to be kind of turning for the better. Citizens, that state fund, was actually depopulating, so they were putting their policies back into the private market. Something like this, should we hit that $100 billion, it could wipe out those smaller companies, and I think the market changes a lot at that point. I don't really see anything besides more state intervention, perhaps federal intervention in that market, because it's going to be unsustainable and insurance prices are going to be so high that it would affect property values.
I got to finally ask about what you're going to be watching tonight. How do you follow, personally, these storms? Do you leave on the Weather Channel, or do you have like a shortwave radio in your bathroom? I mean, what do you do?
I've got like Red Zone, and I just got all the weather forecasts. No, but the National Hurricane Center website is probably the best place to go for the most accurate information. There's a shocking number of amateur meteorologists and websites that follow this stuff.
Yeah.
So one of my colleagues said, every time I pass your screen, I just see radar. So I'm looking at radar and the National Hurricane Center.
Cool.
All right.
Good tip.
Matthew Palazzolo, of course, of Bloomberg Intelligence, talking about Hurricane Milton and what it means for the insurers. This is Bloomberg.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Focus on records, though, today with the S&P 500 index hitting its 44th record of 2024. S&P today up 40, now at 57.92. A gain today of 0.7%. The Dow also at a record up 431, up by 1%. NASDAQ up 108, higher by 0.6%. 10-year 4.07%, 2-year 4.01%. Spot gold fell $14 the ounce, 26.07, down by 0.6%. And West Texas Intermediate crude oil today down 0.5%, 73.23 for a barrel of WTI. Bottom line here, another record for the S&P up 40, a gain of 0.7%. Sources tell Bloomberg Stellantis CEO Carlos Tavares is planning a deep management reshuffle in response to the automaker's disastrous profit warning. Stellantis is the parent of Chrysler, Jeep, and Fiat. Stellantis shares today rose 1.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet. Charles, if you're feeling fancy, thank you for that update, of course. We're just a couple minutes out from that closing bell. And one of the things we were talking about with our friends over at BTV, Matt, is the fact that Constellation Energy had a pretty bad day.
And NRG.
Yeah.
Because look, if I go to the move function on the Standard Poor's 500.
I often do.
Yeah. SPX, Index, MOV. The biggest losers of all 500 stocks are Constellation Energy and NRG Energy in that order. And why?
Yeah, well, you did a call out. You said, please let me know. You begged for answers, and you got one.
I got one. Someone wrote in. I don't know if he's okay with me using his name, so I'm not going to say who, but thank you very much.
Sources familiar.
He says CEG is off on the Google breakup.
Okay.
Likely not going to make a deal similar to Microsoft with the antitrust overhang. That was the whisper last week driving the stock up. That remember we were talking about the potential of Google doing this kind of thing. And I think that is so cool. I can't believe we didn't think of it, the four of us, but you know,
all of our big brains.
If there's a big breakup of Google and you know, they currently are going to need a ton of energy for their AI efforts, well, maybe they'll need less.
You know, you told me that in the commercial break, and initially I rolled my eyes, but actually thinking about it for about 15 more seconds, it does make sense. I mean, you think about the momentum behind this rally that we're seeing in all of these names. You think that Google would be a pretty natural partner, and maybe the fact that you do have this overhang means that they're less likely to want to.
Yeah, and think about how far in the future equity investors discount things.
Yeah.
Jamie Dimon was talking about this with Lisa Abramowitz, right?
Great combo.
We sold off Google today on an event that might be decided in August of 2025. Of course, they're going to appeal.
Yeah.
It's going to be years before anything like that happens. And the market sold Google off on that? Give me a break.
Yeah, it's pretty wild. Of course, Matt has been making that point all day since he and I have been on air since 9 a.m. But let's keep the party going now. We have a great conversation coming up. Let's bring in Dr. Caitlin Rivers. She is associate professor and senior scholar over at the Johns Hopkins Center for Health Security at the Bloomberg School of Public Health. She joins us from Baltimore. And of course, the Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg. He is the founder of Bloomberg LP and Bloomberg Philanthropy.
Is that why it's called the Bloomberg School of Public Health?
Perhaps. Yeah, those two facts would make sense together. So, Dr. Rivers, really great to have you with us. Of course, you're joining us to talk about your new book. The title is Crisis Averted, The Hidden Science of Fighting Outbreaks. Of course, it just hit shelves. Tell us a little bit about the book and what you set out to do when you started writing it.
Thanks so much. It's great to be here. My book, Crisis Averted, is just out this week, and it's about the hidden science of fighting outbreaks. So I really delve into stories from public health history and examine how outbreaks came under control and what we can learn from them. And I'll tell you, a lot of the stories I tell in the book have really resonant echoes with the things we see today. For example, one of my favorite chapters is on truth-telling and the need for public health officials to really level with the public about what they're seeing, what they're learning, and what they're fearing about outbreaks, in contrast to the impulse to kind of conceal or hold back difficult truths. And that's something that I think is very relevant today. So I think readers will learn a lot about public health history, but also learn a lot and look a little bit behind the scenes of how public health works even today.
I think it's such a cool book. It's such an amazing science, and obviously we all have a greater appreciation for what you do, Dr. Rivers, after the pandemic. It's so fun to me, the idea that if you do your job well, none of us notices.
Yeah.
Right? Because crisis averted. But if you make a mistake, like say you're working in a lab in Wuhan, for example, and you let a little bit of the COVID virus slip out the door, then governments around the world shut down. Is that what happened, by the way, speaking of truth-telling?
I think it's more likely that the virus came from animals, but the truth is we'll likely never be able to distinguish between those two possible scenarios.
So it's
And
just a
really
coincidence
difficult.
because, Occam's razor and all.
Well, the vast majority of outbreaks come from animals spillover. I think it's worth investigating and continuing to investigate. But right now, the evidence does point to a natural event.
It's interesting. Yeah, of course. I think that there's just so much research, so many new pieces of information are going to come out about the pandemic as we get further away from it. Of course, it was only 4 years ago that it came out, so that was pretty wild. Anyway, Dr. Rivers, I am curious, of course, Matt makes the point that when you do your job well, that, people don't necessarily know. It's sort of a thankless job in that sense. But talk to us about why it's crucial. Of course, we have a pretty good idea after living through the pandemic, but even on a smaller scale, if we're not talking about, of course, a worldwide pandemic, talk to us about the role that it plays.
It's absolutely right that when we get our wish in public health, when the best possible outcome occurs, nothing happens because we will have been effective at stopping outbreaks in our tracks. Now, that's not always the case. Sometimes outbreaks do grow and grow. We have a few examples even right now. Mpox in Africa, Marburg in Rwanda, and even H5N1 here in the United States in dairy cows. And it's the work of public health to really stop those outbreaks before they come to the public's attention and before they become a big crisis. And of course, again, if we're successful in that, it's unlikely that anyone will notice because we have done our job by stopping those outbreaks in their tracks.
I would imagine you scientists will have more and more success as we learn more, as you study more, as we have more innovation. Does that mean we'll have fewer pandemics, or is there some reason that we could see pandemics accelerate? Because you just named a bunch of threats, right? And we got over COVID, but now we're facing monkeypox. Now we're facing Marburg. Do we have to worry about these more than we would have had to 20 or 50 or 100 years ago?
It's been my observation that major outbreaks happen about every 2 years. Not on the COVID scale, of course, but things that worry scientists like me. That has long been the case. And so although there's a lot going on in the world right now, I don't feel like it's more than usual. But you raise the role of technology. Vaccines, of course, particularly the new mRNA vaccines, are so powerful in fighting outbreaks. But we're always going to have to rely on core public health capabilities, particularly diagnosing people who are ill, contact tracing, isolation, and quarantine. Those are key public health measures, and they're always going to be the first-line response to stopping outbreaks.
But a COVID-sized pandemic, I guess the last time we had one of those was the Spanish flu that didn't come from Spain, my wife tells me all the time.
I'm sure.
Is that really something that only happens every 100 years, or could we have, 2 or 3 of those in a row?
It's totally possible. I'm not particularly worried about that because they are quite rare events, but nature is not on the clock. And so she doesn't necessarily keep track of when we're due.
That's a good point there. I do want to talk a little bit more about vaccines because, of course, one of the big societal debates that emerged during the pandemic was you had anti-vaxxers and then you had people who were very pro-vaccine. And Dr. Rivers, I'm curious from where you sit, were you surprised by the intensity of that debate, the fact that you did have a pretty strong cohort of anti-vaxxers emerge?
It's very true that there was a lot of disagreement about the role of vaccines, and particularly once we got past the first series and started introducing annual vaccination. But I take a lot of heart and a lot of resolution, I guess, from the observation that about 75% of people did get the vaccine, the original series. And so I think when we can make the case for why a public health intervention is important, the public does come along and does listen, at least to the argument we have to make. And so I'm not particularly worried about future pandemics, our ability to really reach the public with those kinds of interventions.
Can you imagine what would have happened if we hadn't come up with a vaccine?
It was such a difficult time that first year. It's really hard to imagine it having stretched on even longer. I think a lot about the essential workers who were still out and about, risking their lives, risking exposure to do their work, and just what a difficult time it was for them and their families. So I'm very grateful the vaccines became available when they did. And in fact, it's now a goal in the public health community to shorten that time scale from when a new virus emerges until a vaccine can be available to 100 days. That's the new goal. So if we're able to pull that off, it would be miraculous.
But can you say, for example, twice as many people would have died, or, is there any way to estimate what the damage would have been without the vaccine?
I think there is. I don't have that handy, but we lost over 1 million Americans even in that first year or two, and COVID remains a leading cause of death. And so it's quite a serious event. The longer we go without vaccines, the worse that would have been.
Yeah, we don't really talk about it anymore, just the fact that people are still dying from COVID, and there's plenty of people who are suffering from long COVID. I know several of them in my own life. But I am curious, Dr. Rivers, I'm taking a look at your notes. You talk about this cycle of panic and neglect. Talk to us about, first of all, what that pattern is and where we are in that cycle.
The cycle of panic and neglect is such an important influence in public health. It means that after a crisis, after COVID, for example, but also after the SARS pandemic in 2003, I don't know if your listeners remember that, the anthrax attacks in 2001 would be another example. There's a huge outpouring of support for public health, financial awareness, new people entering the field. But as time passes and as we are successful at doing our jobs, as I mentioned, as our work is more and more successful and therefore more invisible, people forget. And those resources that were exactly what we used in order to do our jobs well start to fall back. They start to deteriorate. And we're again left in a place of vulnerability. And I feel like that's very much a cycle that I'm seeing playing out after the pandemic. We're coming up on the 5-year anniversary, and I'm not really seeing the continued investment in public health that's needed to even maintain our ability to respond to outbreaks and epidemics, let alone bolster them. And that really troubles me.
It is, of course, it's troublesome when we lose people, especially unnecessarily, and the loss of human life isn't something that you can make light of. But you study crises, both averted and not. Do you have a favorite one?
I think there's so much to learn from all of public health history. I'm really motivated by the eradication of smallpox. Smallpox was an incredibly deadly virus. It killed up to 1/3 of people it infected, and even survivors were left with blindness and with terrible facial scarring. That virus no longer circulates in the world, and that's thanks to the work of epidemiologists in the first half of the 20th century. And I think it just goes to show what public health can accomplish in the way that we can actually change the course of history through our work. And I'm really inspired by that as an example.
All right, Doctor, we have to leave it there. Really enjoyed this conversation. Our thanks, of course, to Dr. Caitlin Rivers, talking about her new book, Crisis Averted, The Hidden Science of Fighting Outbreaks. Of course, on stands now, so you can pick that up. Meanwhile, coming up next on Bloomberg Business Week, we're going to be speaking with Hannah Elliott. She is co-host of Hot Pursuit. It's a podcast that Matt Miller is also a part of. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. We keep track of what's going on with stock market records, and today we hit our 44th record of 2024. Tech shares advanced. The S&P 500 index approaching 5,800. Indeed, a record today also for the Dow Jones Industrial Average. S&P up 40, a gain of 0.7%, 5792 where we stand on the S&P. The Dow today up 431, up by 1%. Nasdaq up 108, gain there of 0.6%. Ahead of the CPI tomorrow morning, 8:30 a.m. Wall Street time. 10-year 4.07%, the 2-year 4.01%. Spot gold down 0.5%, 26.07 the ounce, and West Texas Intermediate crude fell 0.3%, 73.33 a barrel. So traders are gearing up for that key inflation report. As for the Federal Reserve, Max Wasserman is senior portfolio manager at Miramar Capital, and he was a guest right here on Bloomberg Business Week.
The long-term trend is they're going to cut. So I think they're still going to do a quarter and then maybe slow it down, or they may just say, we'll skip it and see more information. There's a lot of other things. You have the hurricanes and what that's going to disrupt the economy. You have what's going on with the strikes. You have what's happening with Boeing. There's a lot of issues out there. So I'm not convinced that they're going to stop cutting just because you have a slightly higher CPI.
Max Wasserman, senior portfolio manager at Miramar Capital. So again, recapping a record today for the U.S. stock market, 44th record of the year for the S&P, up today by 40 points, a gain of 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie, thank you very much for that. I am so happy to welcome to Bloomberg Business Week on radio and right now streaming live on YouTube, Hannah Elliott. She is my partner in crime on our podcast, Hot Pursuit, and I don't even know where to start. We have so much to talk about.
You guys do.
Well, the thing is, she does a lot of work, and then I ask her about it. That's how our relationship
I'm familiar with that.
functions. Oh, yeah, you know how that works, too. Okay, Hannah, let's talk first about the McLaren. You've written a story about F1 successor or P1 successor. Now there's a W1. Explain the importance of this vehicle.
Yeah, so McLaren has really cornered the market on these very rare, very expensive supercars that they tie into, obviously, McLaren's really successful racing team that is leading the Constructors' Championships right now in Formula One. So, they really chose a specific day to announce the successor to the P1 that you mentioned, which is called the W1. This is a $2.1 million supercar. It's got over 1,200 brake horsepower, over 900 foot-pounds of torque. It's just a crazy machine. But the really significant thing about it is it's a hybrid. It's a V8 hybrid, 4-liter twin-turbo V8, and with a hybrid platform. And it's, again, another sign that we're seeing from these automakers that they are not going to leave internal combustion behind just yet. They really are sticking with this hybrid platform that we see more and more cars coming out with, and consumers seem to really like it. This car, the W1, is already all spoken for, specifically for clients, not just allocations to dealerships, but actual clients. It's already sold out, and deliveries begin next year.
Well, Hannah, I'm talking to you as a layperson. I know, enough about cars, but obviously not that much compared to you and Matt. But I am interested when it comes to these supercars, what you're talking about, that, they're not ready to leave those internal combustion engines behind. But talk to me about the hybrid when wrapped into a supercar, because, hybrids, I would imagine they have a lot of zip. You can go really, really fast in a hybrid.
That's a really great question, Katie, and this one's really interesting. It will run for about 2 miles on pure EV mode, which doesn't sound like quite a lot. The hybrid function really comes in handy when you're trying to be stealth. Maybe you're driving the car in a neighborhood and you don't want to wake up your neighbors. It's very quiet. Also, you're right, it's very good right off the line. You have the electric pure band of acceleration. That's absolutely true. But what the internal combustion paired with it really retains, and what everybody wants, is this really tangible feel that you get from, you feel the engine rumble, you hear it. You smell it. It's just this really tangible experience of driving that most people say, I don't get the same thing when I drive something that's pure EV. So the combination of the two really appeals to the supercar buyer. At least that's what McLaren is telling me, and they seem to be right.
So Matt, you still have the emotion of the engine. I know that you're well acquainted with that.
Well, you know, I have a Dodge Challenger Scat Pack. It's got a big 6.4 liter V8. It's loud, it rumbles, it smells like gas, but it's not very fast, to be honest, right? I mean, if I had an electric motor on the front axle, I could actually do some good 0 to 60. I don't care about being fast. I just want, you know,
just want it to be loud.
I just want the feel of it. But look, Hannah, a lot of these super high-end luxury cars that you cover are doing this kind of hybrid, not to save fuel necessarily, not to be green, but to offer more zip to, you know, the big block that they have. You drove, for example, the new Bentley Continental GT in Switzerland.
Yes. Yes. Yeah, this is really, it's interesting because we saw the P1 in 2013. 2013, we also saw, of course, the Porsche 918 Spyder Hybrid, the Ferrari LaFerrari Hybrid. Those were all debuted in 2013. This is nothing new. And yet, to your point, yes, Bentley has just come out with the Continental GT Speed, which is the first hybrid powertrain they've put in the Continental line. And I think initially, 10 years ago, we kind of thought, okay, these cars are going to be green cars and they're going to pave the way for EVs. But you're right, what we've seen now is people like the hybrid for a little bit of a quicker acceleration and some silent stealth mode, and then we switch over into the internal combustion, and we like that too. And yeah, the point is not being green necessarily. It's about actually, well, it's about meeting emission standards, but it's also just about that quick zip of power and some other cool stuff hybrids can do.
Right now I'm driving a Mercedes-Benz AMG S63. It's the E-Performance model. So it does have a V8, the twin-turbo 4-liter V8 we're all familiar with from Mercedes, but it's a hybrid, so it has 791 horsepower and 1,055 pound-feet of torque.
That sounds like
that beats the McLaren.
It is unbelievable.
Wow.
And the technology just blows me away. So more and more companies are doing this. Let's talk about our podcast for a minute, Hannah. I think it's a really great listen. You can get it on Bloomberg.com or Spotify or wherever you get your podcasts. Apple, for example. That's where I listen to my podcasts. Today we had a guy who started a business called Road Scholar, Cam Ingram. His dad has one of the biggest or best Porsche collections, I gather, in the country, but he does some really cool stuff.
Yeah, Cam Ingram of Road Scholars is so fascinating to talk to. I mean, the big headline with him is he's the guy that does the restorations for the Porsche family, for Jerry Seinfeld, for Ralph Lauren. This is the guy that these well-known collectors take their air-cooled Porsches to do a full Concours restoration. And we're talking 4,000 hours, 5,000 hours spent on the car. And the key is it's not over-restored. So Cam is the one researching what the factory in Germany was putting out in the 50s, for instance, and making the cars restored to that specification, not to perfection, if that makes sense.
5,000 hours of work. Hannah, I was reading your old a story that you wrote from back in the day. They did a paint job that took 800 hours.
That's wild.
Yeah. I mean, it's just, and it's paint matching. It's matching what's underneath the paint. It's matching like the poor restorations that were done in the 80s, so that it's all uniform, but also not perfectly polished, because that's, not as authentic.
Imagine that Wolfgang Porsche, his family owns Porsche.
Yeah.
And they take their Porsches to Cam to get restored.
Just wild.
It's a really cool podcast. You should definitely listen to it. Download our podcast. Hannah, great having you on. I'm so grateful that I get to work with you. So thank you very much for joining us. Hannah Elliott there from Bloomberg Pursuits out in Los Angeles. We'll be back in a few moments. This is Bloomberg.
Listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
All right, you know, Katie, that I love generators.
Sure do.
We interviewed the CEO of Generac.
Yeah.
Which was pretty cool. I can't really afford one because the kind that I want are so expensive, and it's like we only have in Scarsdale, New York, one power outage every 10 years.
Yeah.
I can't get behind putting $20,000 behind a couple days of power.
I was going to ask, I mean, how much does a generator cost? Do they all cost $20,000?
No, you can go out and get one for under $1,000 at Home Depot.
Not bad.
You know, a portable one.
A lot of people have been doing that.
Yeah, for sure. Well, especially now, right? Because you've just had this hurricane sweep through Florida and really, you know, Asheville, North Carolina. Now you have one about to make landfall in Florida, Hurricane Milton. And even though it's down to a Category 3, at least I've just recently read that, it's still like 150 mile an hour
I think
winds.
125.
Okay, that's the same thing to me. Let's bring in Mark Shediak right now. Bloomberg News, he covers these things for us. And Mark, you lead you're the deputy team leader for the Power and Natural Disasters team. You must be working round the clock the last few weeks because we've had these back-to-back storms. Are generators just sold out? Has everybody in the U.S. Southeast gone to Home Depot and just emptied the shelves?
Well, pretty close to it. I actually spoke with the CEO of Generac yesterday, and he said that they were actually running low on their what they call their portable generators, the kind that you would go to Home Depot and get off the shelf. And at this point, with the storm approaching Florida, I think it would be very hard to find one. Most of the shelves are empty, and it'll be a little bit before they can restock shelves because they have to wait for the storm to pass and then for it to be safe to come back in. So if you haven't gotten a portable generator by now, you're probably out of luck.
Wow. Yeah. And it's interesting to see the reaction in the share price. Of course, a big run up in Generac Holdings. The company stock hit a 52-week high on Monday. And Mark, I found that interesting because, of course, it seems like they're, running low on supply. That would limit the amount of sales that they can make from here, obviously.
Yeah, so a couple things there. One, I think investors look at Generac as kind of like a bet on a company that could do very well if there are a lot of power outages. And so I think the assumption is that their sales have been really high for the past couple of months because we've had these really bad storms. And even though they're running low on what they call their mobile generators, they also sell a product, the kind that Matt is sort of pining for, which is these larger stationary generators that you would need to have installed at your house that would automatically turn on, if there's any sort of power outage. And what Generac says is basically what they find is after these storms pass through, they get a lot more leads from people interested in buying their, what they call their home standby product.
Yeah, when we had in Scarsdale a power outage a couple months ago, and 3 people on my block had contractors come in, pouring concrete pads and putting in these expensive generators.
Right.
Like I said, too rich for my blood right now. And the other thing is, Mark, I'm curious what you think about this. I feel like I'm probably going to have an electric pickup truck in the future. At some point, the technology is already there. The Ford F-150, the electric version already works this way. Your car can run your house for a couple days in terms of power, right? So I feel like at some point we won't even need generators because we'll be driving them.
Yeah, I mean, I guess there are a couple of thoughts on that. One, more automakers are making their electric trucks available to have that technology available to power your house.
Bidirectional.
Bidirectional charging, although that's not ubiquitous now, and it's slowly been rolling out. The other thing is, folks like Elon Musk argue that, during a storm, you may want to evacuate, so you're going to want to get into your car and leave and not maybe or want to have that car available to use, so you maybe don't want to have it as a standby generator. So, there are a couple
because he wants to sell you a power wall, right?
Right, exactly. So there are a couple, but I do think that we'll see more and more electric vehicles on the road that can power your house for a few hours or a few days, and that may cut down a little bit on these backup power generator sales, but I wouldn't expect it to be as significant.
Can I ask you about the frequency and severity of natural disasters? Katie and I were both saying, purely anecdotally, seems like these things are happening more and more. Everyone says that. Have you looked at the data? Is that indeed the case?
That's a great question. And what Generac CEO was telling me, they track that sort of data. They've been tracking it since 2010. And what they found is this year,